Hello everyone, I am Pratap here. We are at lesson 28. It is about pierced zone strategies. And this lesson is having dependency on the earlier lessons. If this is your first visit to our channel and if you are not aware of the earlier training lessons, I will explain the procedure. So please go to our NeoStock YouTube channel. So in this channel homepage, click on the tab Posts. Then you get access to this post. Some of you might be seeing the tab Community in place of Posts. Click on that Community tab. You get access to this post. And this post is having a YouTube playlist link that will take you to all the training lessons. This is one procedure. Or another procedure, you can go to playlists. In the playlist, you are seeing Supply Demand Zone Price Action Course. From here also, you can click on this link, View Full Playlist. Just click on that. Then you get access to all the training lessons, earlier training lessons. You just need to go down to the bottom of the page. And here you have all the training lessons starting from lesson 1.1. I placed all these lessons in an order so that you can easily go through all these lessons, complete one by one, and also practice the concepts as per the training instructions mentioned at our Telegram channel. You can also find the Telegram channel link in this video description. Whatever the video you are watching, in every video description, our Telegram channel link is available. So from the link you can go to the Telegram channel. In the Telegram channel, pinned messages will be there at the top of the Telegram channel. You can see a small message, pinned messages. Click on that pinned messages. All the training instructions I have mentioned in that. And please practice all the concepts according to the training instructions. Then only you get a very good understanding on the concepts. Okay. Now let's get into lesson 28, and these are the different topics you will be learning. We will discuss one by one. First, let us understand what is a pierced zone, because pierced zone is a concept you already learned. I gave you an overview about pierced zones in our phase 1 training program. In lesson 1 to lesson 10, you learned some important points about pierced zone. Pierced zone is a new concept I developed by introducing the zone freshness as a pierced. This is totally a new concept. People aware a zone can be pierced, that's it. But there are no strategies they are aware. And there is no zone freshness called pierced. Because I introduced the new freshness pierced, based on that we will be able to develop several strategies. That is what you are going to learn in this video. And I already explained this concept in lesson 7 about pierced zone. I will also give you again an overview what you learned earlier. Look into this chart. Here you have a rally, base rally is there. This is the demand zone. And this is the current price where price closed near to the zone. Now let us see what is happening in the next candle. Observe carefully. Prices came out of the zone and then immediately they came back and closed inside the zone. Sometimes again it will further go up and make close above the zone. That possibility is also there. But definitely price is not closed below the zone if it is a demand zone. What made prices again go back into the zone? Why not the prices were not continuously further falling down after this zone is violated? That is what you have to understand. But meanwhile, in lesson 7, you learned once the zone is pierced, the zone freshness will be changed to pierced. What could be the earlier status? Zone freshness, Maybe it could be a fresh zone, or maybe it could be a tested zone. In this example, it is already tested. If it is not tested, it could be a fresh zone. But the moment the zone is violated, prices came out of the zone and again go back and close it inside the zone. At the time, zone freshness will be changed to pierced. When the status is changed to pierced, what kind of impact will be there? There will be a couple of impacts we will experience. I will explain. First thing could be the opposing zone will get the zone achievement. We have here, because this is a pierced zone is a demand zone, opposing zone is the supply zone, or vice versa. In this example, opposing zone is supply zone. And this supply zone gets the zone achievement as a violated opposing zone, VOZ. Now, zone achievement equals to violated opposing zone. Even completely price closed outside the zone also, it gets the zone achievement same. Even pierced zone also, it gets the same zone achievement. Why? Because this zone, this supply zone in this example, is responsible for consuming all the order flow in this demand zone. That's why it gets this special power, zone achievement. All these points we discussed in our phase 1 training program. Okay, regarding pierced zones, what you learned in our phase 1 program, let me summarize. The first point is what we just discussed. When a zone is pierced, its opposing zone gets violated opposing zone achievement, VOZ achievement. When a demand zone is pierced, uptrend will be changed to sideways trend. Uptrend changes to sideways trend. Similarly, when a demand zone is pierced, sideways trend changes to downtrend. Suppose the trend is sideways, it will be changed to down. Same is the case with supply zones, but in different rules. When a supply zone is pierced, downtrend changes to sideways. What about uptrend? In case uptrend is there, it will continue to uptrend. It won't change. Same will continue. But a downtrend, then it will be changed to sideways. Suppose sideways, then sideways is changes to uptrend. If uptrend, uptrend will continue to uptrend. So that's why these rules are very, very important for the trend changes point of view. We discussed all these points during our phase 1 training course. That is, phase 1 is lesson 1 to lesson 10 videos, training lessons. Okay, so this is the summary of what you already learned. But what you should learn now? What made a zone is pierced? I repeat, what made a zone is pierced? This is what you should understand. See, once the prices passes through the zone by consuming all the order flows and then came out of the zone, what could be the reason for pushing again the prices back to the zone? There are 3 different reasons are there. First reason is there could be a bull or bear trap outside the zone that pushes the prices back into the zone. You already learned bull trap and bear trap in lesson 21. In lesson 21, you have around 8 or 9 videos are there. So one of those videos you learned about bull and bear traps. You learned bull trap will be above the supply zone, bear trap will be below the demand zone. If a demand zone is pierced, below if there is a bull trap, the bear trap is having a strong institutional order flow and again it will push the prices up. Similarly, if it is a supply zone, if a supply zone is pierced, above the supply zone, if there is a bull trap, the bull trap again pushes the prices back into the supply zone. So this is the way the zone gets the status as pierced zone, because price is not closed outside the zone after the prices passes through the zone. Again they came back and closed inside the zone. So this is one reason. Bull and bear traps could be the reason. What could be the another reason? There could be a lower time frame horizon that pushes the prices back into the zone. Lesson 22, you learn the concept. Lower time frame zone as an horizon to the higher time frame zone. Whatever you learned in lesson 22. What you learned in lesson 22? In short, the lower time frame zone as an horizon means lower time frame zone is overlapped with the higher time frame zone at the distal line. That means a part of the order flow is inside the zone and another part of the order flow is outside the zone within the lower time frame. It is inside higher time frame zone and another part outside higher time frame zone. Let us assume inside the higher time frame zone, whatever the order flow is there, that is completely consumed. Now prices came out of the higher time frame zone, but still the lower time frame overlap is having another order flow or other part of the order flow which is outside the zone. Probably that part is having a very strong institutional order flow. So that could be the reason why the remaining part again pushing the prices back into the zone. That way your higher time frame zone will be pierced. This could be another reason. And third reason is there could be a LOTL zone. When a zone will be LOTL, if both the zones are overlapped with each other, or both the zones they are almost near to each other within the same time frame. Both the zones should belong to the same time frame. But earlier in the previous two scenarios, the bull and bear traps are LTF zone as an horizon. Both are lower time frame zones. But LOTL scenario, both should belong to the same time frame. So within the same time frame, you have two zones and both the zones are overlapped with each other. Or the distance between both the zones are very narrow, negligible difference. Then you land it as a LOTL level on the top of the level. That is what you learned in your phase 1 training course. So your first zone is a little above the second zone and first zone is completely violated and now prices entered into the second zone, LOTL zone. And the second zone is having a strong institutional order flow that again pushed the prices back to the inside the first zone. That way also the first zone will be pierced. These are the different reasons will be there. Let me show you this example. Look into this chart. ITC. See here ITC, this is a rally 1, 2, 3 base candles and a rally candle. Rally, base, rally. Look here, this zone is pierced. And who is pushing the prices again up? Below the zone, who is pushing? Here you have again a rally, base, rally. See, here you have a gap at the hidden body. So from here it is a rally candle, base candle, again a rally candle. Now you draw the zone. See here, first time when it is pierced, it picked up the orders from the zone and moved up. Again came, once again this zone is having some more order flow, again it pushed. Probably the second zone is having a very strong institutional order flow. And the first one might be weak. See, when the order flow is weak, mostly the zone will be violated, or maybe the order flow is strong, but at the same time supply is very strong. It consumed all the order flow. In that scenario also, the zone will be violated. That means all the orders will be consumed. Could be any reason. Generally, in LOTL scenarios, what will happen? The first zone will consume most of the order flow, and the second zone will be having strong order flow. It will push the prices up. That means by the time prices reach this zone, this entire supply will be consumed. Now demand will become all of a sudden dominate the supply, and then it will push. When the order flow is very strong in this area, multiple times this zone will be providing. In case if it is a high liquidity area, institutions will keep on adding new orders into this area. Anything will happen. But these are the reasons. Okay. That is what the meaning. There could be LOTL zone that pushes the price back into the zone. And these examples we will see. The bull bear trap examples or lower time frames horizon example that are making a zone pierced, not violated, it's pierced. Violated means the candle completely closes outside the zone. If prices again go back to the zone, it is pierced. Okay. First of all, what kind of uses we are having with pierced zones? Many people, when a zone is pierced, they ignore that as zone. Even we treated pierced zones like that all these days, because you haven't learned this concept. Now you are learning. Now you will understand why I made it as a separate concept, why I introduced or why I developed this pierced zone concept. Because many observations I made. Because I did a huge research in supply-demand zone price action. At the time I identified many new things. And this is one such kind of concept. Then I developed the strategies while developing the software. I experimented with my software and found surprising results. The moment I saw the surprising results, I have built a clear strategy using pierced zones, and accordingly I developed even my software. First of all, how we need to look into the pierced zones. All these days, how you look into the zone, now how you should change your perspective. That is important. All these days you have seen pierced zones as if they are useless. We are just using them for reference purpose. That is the way we thought. When our pierced zones are there, we are eliminating those pierced zones from our strategies. If you look into the premium video reports, every time what we are doing? We are eliminating the pierced zones, because for those strategies, pierced zones are not applicable. Bullish and bearish trade setups, your high liquidity zones. For their strategies point of view, pierced zones should not be used. But pierced zones can be used in another way. Do the reverse engineering. What is reverse engineering? First you identify the pierced zone. Based on that, whatever the advantages we get because of the pierced zones, try to make use of those advantages. What advantages we get? That is what we are learning. Who are the reasons for becoming the pierced zones? These three are the reasons. Bull or bear traps, or lower time frame zone horizons, or LOTL zones. Now what you have to do? These reasons you try to make use. Because bull or bear traps, the institutional order flows are very strong. lower time frame horizon as to the higher time frame lesson 22 concept, the order flows are very strong. Even LOTL zones, the zone below the another zone, if it is a demand zone, or the zone above your first zone. So those second zones are very strong, order flows will be there. Generally, that is the way institutions keep their order flows. So that's why make use of that. How can we make use? Because once you identify a pierced zones, maybe multiple times the zones might be testing. Not pierced zone. The zone which is responsible for making your higher time frame zone as a pierced zone. That means these traps are lower time frame horizons. So we can find them. If you know a pierced zone, you can easily find them. How easily we can find them? Let us see here. First scenario we are discussing about finding the traps by using pierced zones. How to find the traps? Assume you have a pierced zone with you. You are aware of the pierced zone. Then how to find the traps? Simple procedure, but we will discuss. First let me explain through this diagram. So in this candle, prices came out of the zone. Remember, the candle is not completed. But it came at some point of time before closing of this candle. It came out of the zone, but the closing is not yet completed. What is our feeling? This zone is completely violated, but not. Because after candle close only you have to tell whether it is violated completely or it is pierced or something else. And let us assume at this place there is a lower time frame zone as a trap. This one is higher time frame zone. This is lower time frame. What could be the lower time frame zone? It could be one time frame below, or two time frames below, or three time frames below, anything. Lower time frame zone is a general English word. Not I am talking about HTF or LTF zones. In our bullish or bearish trade setups, you are using LTF, ITF, HTF. I am not talking about them. The general English words, lower time frame, higher time frame. When you are referring the general English word, any time frame below the current time frame. Let us assume this is the current time frame, is the higher time frame. And one time frame below is a lower time frame. Two time frames below also lower time frame. Three time frames below is also lower time frame. So any lower time frame zone that is holding this price and then pushing back, your focus should be on that zone. Now you will be missing the opportunity. Of course, you may get this opportunity before prices are entering into this zone. If you analyze and if you believe this could act as a trap, then you can focus on this and you can plan a trade. But sometimes these zones might be violated. Prices will further go down. That possibility is there. That's why some people will be having fears whether to accept a trade in this zone or not. But once you get experience, you will be in a position to assess. Maybe this is the area strong order flow might be there. At least 80 to 90% level you can properly judge based on your intuition. Okay, anyway, there is a lower time frame zone which is acting as a trap. Because it is acting as a trap, definitely institutions would have kept a huge order flow in this area. This order flow again pushing the prices back. Now you see, the prices again moved back. Now candle is closed. Because the candle is closed inside the zone, not outside. Maybe it can close above the zone, still it is okay. But definitely not below the demand zone. If it is candle is closed below the demand zone, this is completely a violated zone. Now candle is closed inside, Now we named it as pierced zone and you are learning new strategies. Okay, in such kind of situation, next time you can plan some trades in this zone based on the previous price actions by observing the previous price actions. How strong it is pushing. Based on all these calculations, maybe next time whether you can take another trade in this zone. Suppose if price is close very deep, maybe you may not take the risk. If more order flow is there in this area, still you can plan another trade next time. All these are all depending on your experience and your understanding on these concepts. You will take a decision. Sometimes these zones may work second time, third time, even fourth time also it may work sometimes. Sometimes second time it may be violated. That possibility is there. That's why I'm telling, your experience helps here. But this pierced zone strategy will help you to identify these kind of zones. That's why the procedure is very simple. Whatever I explained now, same thing I put it in text. First, what you have to do, identify a pierced zone in any higher time frame chart. Here one point I have to tell you, important point. Generally, higher time frames can be effective higher time frames can be daily, weekly, monthly. Sometimes even you can use 75 minutes also. Better if 75 minutes are high liquidity zones, then only use this strategy. High liquidity zones works, bull traps, bear traps, lower time frame zone, horizon. They are working effectively. But they are very effective in daily or weekly or a monthly time frame, but daily is the very excellent because it is very easy to analyze the charts. If daily zone is a pierced zone, that's why almost all the examples I took in the daily time frame I want to show you how powerful this daily time frame when you are dealing with pierced zones. Of course, it works even weekly and monthly also. But piercing monthly zones takes rarely it happens. You have to wait for a long period. Daily means more opportunities we get. That's why I'm telling daily is more effective means more opportunities we get and effectiveness is also better. Okay, identify your pierced zone in any higher time frame chart. Daily, weekly or monthly charts. Sometimes 75 minutes high liquidity zones. Okay, next after that what you have to do? Go to the lower time frame. Which lower time frame? Maybe one lower time frame or two lower time frames or three lower time frames. Depending on which time frame is supporting when a zone is pierced. Maybe here you have only 5 minutes time frame. 15 minutes, 75 minutes is not there in this area. Then directly go to the 5 minutes. And maybe from 75 minutes time frame it is prices are moving up. Then draw 75 and fine tune the zone. See, ultimate goal is we have to fine tune to find the exact order, the real order flows. If it is a 15 minutes, draw the zone and again fine tune the 15 minute zone to 5 minutes. If it is 5 minutes, directly you can plan in 5 minutes. If 5 minutes is not very clear and you have some doubt, at the time go to 3 minutes or 1 minute. They are very rare situations. Okay. So that's why go to the lower time frame and find the lower time frame zone that holds the prices. That price should hold in that lower price. Otherwise there is no meaning, right? And again, that from that particular lower time frame zone, the prices should be pushed back to the higher time frame zone. And then that price action made the higher time frame zone as a pierced zone. So you have to find that zone from where the prices again pushed back to the zone. Our concentration will be on that zone for the future trades. If it is a fine-tuned zone, probably that may support. Definitely fine-tuned zone supports. Suppose below daily 75 zone is there, that is having 15, that is having fine. Such kind of setup is there. Next time also that zone works very well. Second time, even third time also, many times they work. Okay. If the lower time frame zone is completely outside the higher time frame zone, the lower time frame zone could be a trap. That is what. Trap should be completely outside the higher time frame zone. It should not overlap. It is overlapped, then that is the lower time frame origin to the higher time frame. See how concepts are changing with small differences in the price action. So that's why this is very important. The lower time frame zone could be a trap. It should be completely outside the higher time frame zone. That means this lower time frame zone should not overlap with higher time frame zone. Okay. Let us look into this example. IEX. I am selecting IEX. This is a daily chart. See, IEX is having a piercer zone here. Drop, base, rally. Have you noticed in this candle, this zone is violated? Now go to the lower time frame. Which lower time frame? First you go to 75. If 75 no zone is there, then go to 15. Until you find a zone from where it picked up the orders and then further moved up and closed inside the zone. You have to find that kind of lower time frame zone. If it is immediately 75, draw 75 and fine tune that 75 up to 5 minutes time frame. Suppose if it is directly 5 minutes, you draw the 5 minutes, from there you will be taking the trades. Okay, now because this is the daily zone, your main zone, piercer zone is the daily zone. Now I have to move one time frame below, that is 75 minutes time frame. Is there any zone at the 75 minutes here? From the zone it is pierced coming somewhere here. I couldn't see. Rally candle, not very clear. No zone on the 75. So now what I am doing, I am going one more time frame below, 15 minutes time frame. From the 15 minutes time frame, best option is, see, when you are moving lower time frames, the chart will become very, it's not very clear. That's why the technique is, when the zone is pierced, draw a horizontal line so that will be a reference. See here, from here it pushed. That means in this blue color area, you should find a lower time frame zone. Are you seeing any lower time frame zone? Yes. Here we have this blue color area, we have rally, 2 base candles and a rally candle. So this is the area you should focus. This is the 15 minutes zone. 15 minutes demand zone. Now I can delete this blue color line. See, now you go back. See, from this area it picked up the orders and prices moved up. Okay, now what you have to do? To find the exact order flow, fine tune up to the 5 minutes time frame. Go to the 5 minutes time frame. Suppose 5 minutes time frame is not there. There are higher chances this zone might be violated next time. So that's why you should be very careful. See here you have a drop candle. You have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 base candles and a rally candle. Drop, base, rally. You can also consider rally, base, rally, but this is looking like a small candle. That's why I'm putting them into the base candles list. Because this is a drop up to the low of this legging candle. We are drawing the zone. So this is the 5 minutes demand zone. This is a fine-tuned 5 minutes demand zone inside the 15 minutes demand zone. Okay. first time when it is pierced, it may come into the fine-tuned area or it may not come. It doesn't matter. But next time when you are planning your trade, in this fine-tuned area you plan. Why? Risk management point of view. See, first time itself it came into this fine-tuned area. After that, prices moved up and then again came almost close to the digital line. Now here again a drop base rally is created. That means another opportunity is that means institutions are adding new order flow in this area, the 5-minute zone. See how sharply it moved. If you would have identified this zone the moment it is violated, next time maybe if you would have planned a trade, huge profit you would have got. How sharply prices moved up. That is the power of the traps. And how we are identifying these traps? By using pierced zone. That's why pierced zones are very important. See what happened? The last Friday, prices entered in the zone and then moved up. Maybe there are two possibilities. The next trading session on Monday, either this will be further coming and again moving up. There are chances it may violate. Who knows? Because tomorrow morning, if the supply is very strong, there are chances it may consume entire demand in this area. But previously, institutions added new order flows here. There is another possibility. Because already it took entry yesterday, the last candle, the 5 minutes candle. Maybe tomorrow in continuation prices may further move up. That possibility is also there. Anything will happen that we can't predict. But only thing we know is there is a order flow. If the risk is within our accepted limit, we can plan a trade. Monday, once market is opened, prices again enters into this zone, maybe you can plan. If it is violated anyway, it is a small loss only. Because we are taking at 5 minutes. 5 minutes, why we are going to minimize the risk. So that our, in case if anything analysis goes wrong, the risk will be very small. That is okay, we can accept this very small loss, not a problem. But when we get the profit, you get a big profit. Okay. See, who is helping to plan such kind of trades? Pierced zones are helping. We are taking pierced zone as a reference and we are planning such kind of trades. Okay, now let us look into the next scenario. Next, finding the lower time frame horizon by using pierced zone. What is lower time frame horizon? At the distal line of this zone, a part of the zone is inside and another part of the zone is outside. That is our LTF zone horizons. See, prices are coming down and finally this distal line, out of the distal line prices came. That means entire order flow in this area is consumed. When prices reached this level, exactly at this level, let us assume there is a lower time frame zone as an horizon. See here? This is the lower time frame zone as an horizon. How this zone is there? A part of this zone is inside this zone and another part of this lower time frame zone is outside this demand zone. So that's why we are calling it as a lower time frame zone as an horizon to this higher time frame zone. Because higher time frame zone picked up the orders here. See here, it picked up the orders from this lower time frame zone. And then entire move started. That is what you learned in lesson 22. And such kind of lower time frame zones will be having a very strong institutional order flows. That's why such kind of zones will support multiple tests. Okay, now what will happen after that? Because here the order flow is very strong, this order flow again pushed the prices back into the zone. Now this candle is closed. That means this main time frame, our main time frame, that means higher time frame, in this chart, the zone is not completely violated. It is pierced. The status is pierced. And who is the reason for pushing the prices back into this zone? This lower time frame zone horizon. Lesson 22 concept. That's why these pierced zones will be helping us in finding such kind of zones. When we will be able to find once the zone is pierced. So let us look into this procedure. First, what you have to do, identify the pierced zone in any higher time frame chart. Go to the lower time frame and find the lower time frame zone that holds the price and pushes the price back to the higher time frame zone and made the higher time frame zone as a pierced zone. That means this procedure is exactly same as the previous one. Then what is the difference? If the lower time frame zone is overlapped with the distal line of the higher time frame zone, the lower time frame zone is the horizon. If it is outside, it is a trap, bull or bear trap, depending on demand or supply zone. But if it is overlapped with the distal line, it is lesson 22 concept. See, a small difference in the price action completely changing our concepts. Okay, so that's why this is important. The lower time frame is outside the zone or overlapped with the distal line. That is the important. Okay. Now, let me show you an example in this scenario. METROPOLIS daily chart. You might be wondering how I got all these stocks. I will come back to that after some time. That is the power of our NeoStock software. I know all these days many of you might be wondering why this, what is the use of the pierced zone? Every time we are making the minimum value 0, maximum value 0. That is the way you might be thinking. But that is the one game changer for analyzing our stocks with a different perspective. Okay, anyway, this is a METROPOLIS drop base rally. One, two, three, four base candles, and fifth candle is a medium size candle, part of the base, and then you have a follow through candles, large candles. Maybe imbalance started from this candle, I agree. But it is inside the zone. Inside the zone, you can't use the candle as a leg out. Okay. So this is the daily zone. Is it pierced? Yes. Who is the reason for making this zone pierced? So as usual, we are drawing a horizontal line here to find any lower time frame zone in this blue color area. Okay, now I am changing the time frame to 75 minutes. Here at 75 minutes, I am finding a drop base rally. Let me draw the horizon. This is the 75-minute zone. 75-minute zone, let me give it a light color. Okay, now I can delete this blue color line because we find the zone from where the prices were started moving up. But have you noticed? This 75-minute zone is overlapped with the daily zone at the distal line. This is what lesson 22 concept. Lower time frame zone, that is 75-minute zone, as an horizon to the higher time frame zone, that is daily zone. When you have such kind of zones, the order flows are very strong. Of course, The real strong in the order flow you can find at the fine-tuned zones at the 5 minutes level. Fine-tuned 5 minutes. So now let me finish my fine-tuning work here. We have a drop base rally. I am changing to the 15 minutes time frame. In the 15 minutes time frame, we need to look for 15 minutes order flows. Is there any 15 minutes order flow is available? Yes. Let us assume this is my drop candle. All these are all base candles and a rally candle. This is a failed ERC, but it is a rally candle, dynamic view point of view. All these are all base candles, drop base rally. So this is the 15 minutes demand zone. This is inside the 75 minutes demand zone. 15 minutes demand zone is inside the 75. Okay, now this 15 minutes again you need to fine tune with 5 minutes time frame. That is very important. Go to the 5 minutes time frame. Within the 15 minutes, you have to identify the 5 minute zone. Is there any 5 minute zone? Yes, there is a 5 minute zone. You have a drop candle, you have 3 base candles, and then you have a rally candle, failed ERC candle as a rally with a dynamic viewpoint of view. Now we can draw a zone like this. This is the 5 minutes demand zone. See, this 5 minutes is there inside the 15 minutes. 15 minutes is there inside the 75 minutes. And this 75 minutes is overlapped with the daily zone at the distal line. See here, it is overlapped at the distal line. Okay, fine-tuned 5 minute zone is a little below the daily zone, distal line. That is okay, that is acceptable. No issues at all. See, order flow will be there even in the 15 minutes area, even in the 75 minutes area also. But fine-tuned 5 minutes level, strong order flow will be there. That is what the indication. Many times you see, prices may not reach the fine-tuned 5 minutes. A little above, it will start moving up. That means 15 minutes fine-tuned also order flow will be there. But why we are planning trades in the fine-tuned 5 minutes is intraday points of view. If you are going for short-term trading, you take at the fine-tuned 15 minutes level or fine-tuned 75 minutes level. You can plan your trades. Many times why we go up to 5 minutes level is to manage the risk. Sometimes managing the risk at 15 minutes zone may not be possible. If it is intraday trading, no other choice. You have to take trades only in the fine-tuned 5 minute zones. Even if you miss the trade, not a problem. Because intraday point of view, risk management is very, very difficult. If you are giving a lot of relaxation, taking entries at 15 minutes, you won't get enough profits. You won't get RRs. So that's why you have to understand. Any one lower time frame has to be violated. So it has to be overlapped. Here 75 minutes is overlapped. Even 15 minutes also overlapped. 5 minutes is slightly missed. That is okay. See here, prices entered into, this is a low, entered into this 15 minutes or 75 or even 15 minutes area, almost close to the 5 minutes area. And then it started moving up and the entire daily zone formation is completed here. This is the daily distal line. This is the daily distal line. Okay, once the daily zone is pierced, see, it picked up the orders from this zone only. The same day, morning 9:30 candle on 26th December. After that again further came, it picked up the orders and moved up. Once again came, a lot of struggle here because that day supply is also very strong. But still the whole supply is managed by this zone. And again came and now started moving up, moving up. prices were traveling up for the next few days. When you got the trade here on 26th December, and when it reached the maximum on 31st December, see, it gave a very good profit all these days. And now again prices came and it reached this zone the last trading day, Friday. Today Sunday, right? The last trading day is Friday. And once again, almost this time prices came close to the distal line. It touched the distal line. And then started moving up, and gave a good profit during the intraday. Next time, do we plan in this zone? No, because prices reached till the distal line and no new order flows created here. So definitely next time we will avoid. But those who took the trade on yesterday, they would have got a very good intraday profit. It's a very big move during the intraday, yesterday. And who is helping to get this kind of trade? The pierced zone is helping. You're taking the reference from the pierced zone and then you're trying to find the traps or lower time frame zone origins, LTF origins. But how to get the pierced zone list? That magic is done by our NeoStock software. That's why I collected so many zones today. But this is a good example for this concept of finding the lower time frame zone origin by using pierced zones. Okay, next usage with the pierced zones. It's a very important point. All these days, pierced zones means no order flows. That way we thought. Now we are trying to change our perspective. Why? Because now we are thinking like institutions. Earlier we thought like a retail traders, a normal supply demand zone traders. But now we are thinking like a institutions. How institutions will try to trap us. Because our thinking is not like institutions. Our thinking like just a normal supply demand zone trader. We learned some concepts, we by-hearted the concepts, that's it. Blindly we are saying that. Why I am saying? There are reasons. Still some of you know why I am talking this. This is the way. Because I remember when I started the channel 1 year back, when I was talking about a zone supports multi-testing, many people criticized me. No, it should be a press zone, it should be a press zone, you cannot take a trade. In some other forums, few people even they try to target personally because I am talking the concept that they land against that I am talking. Do you remember? I think in 13th century or 14th century, when people are saying Earth is rotating the sun. Till that people will be thinking the sun will be rotating around the Earth. But some astronomy experiments scientists, when they said Earth will be moving, how people criticized. Some people thrown stones against that person. They beat him because whatever they are believing till then, this person is telling against that. Same thing happened to me. I didn't see any difference. When I said a fresh zones need not be a fresh zone, then directly some people targeted. How can you can take a trade? They are talking about daily zones. Once a daily zone is tested, you can't use it at all. That's it, a fresh zone. Because they are not aware of certain concepts. It's not their problem. They are believing a concept. That's it. That means they are thinking like retail traders only. But what I want our NeoStock students, we should think like institutions. Beyond the theory we are trying to understand. We are trying to find the reasons behind every concept. That way only I identified. When I was trying to look for the actual reasons behind every concept, I thought few concepts we are learning in a wrong way. Few concepts we can learn in a different way. All permutations and combinations, everything I'm evaluating that way, did experiments. Finally found some interesting topics. That is what I explained, and still you are learning. And still you will be learning new other strategies also. See, today your perspective about pierced zones will be changing now. All these days, pierced zones are useless. But all of a sudden today, pierced zone become a very powerful concept, and it is helping us. It is helping us in identifying a strong institutional order flows. Exactly the same way, now we need to think in a different direction, how we can find a new order flows within the pierced zone. How it is possible? All the order flows are consumed. How do we get new order flows? That is the question you might ask immediately. When these traps are lower time frame zone as an horizon, when they are pushing the prices again back into the zone, when prices are moving up, institutions might add new order flows. On what basis they add? Based on the thinking of a retail trader. How a retail trader thinks, institutions knows it. Based on that, they want to trap us. Or based on that, they don't want retail traders involved in their order flows. Interfere in their order flows. See, ultimately, what is the goal of an institution? They try to hide their order flows as much as possible, so that they won't be disturbed at all. Even 1%, 2% disturbed is a loss for him. Loss means not the money, opportunity. The time is very important for institutions. If one day the opportunity they lose, that's it. One day it's gone for them. Because their money game is with precise calculations. So that's why they want to move away from their order flows. So they want to hide them. So pierced zone is one area. Generally what we think or what we learned all these days, pierced zone, we should not take trades. But now we are thinking in a different way. Let me explain the reasons. Institution knows supply demand zone traders analyze the stocks based on the top-down analysis. I already gave you an overview in one of the HLQ zone analysis videos. I kept that video in important strategies and analysis playlist. And those who are every day attending HLQ zone analysis, you are all aware, because every day we are starting with daily time frame, from daily 75 to 15 minutes and 5 minutes. That is what top down approach, higher time frame to lower time frame, one by one, and you are analyzing. If there is any pierced zone, are we analyzing that stock? No, because in our perspective, pierced zones means all the order flows are consumed. So institutions knows about it. What they knows? They knows traders believe. Traders means retail traders like us. Believe when there is a pierced zone, next time prices easily pass through the zone and ignore that area in their analysis. We know that when prices are easily passing that zone, why do you want to waste our time by spending in that area? Because we have less time. Okay, forget about our software, but outside, this kind of analysis softwares are not available. Few people developed some softwares related to drawing the zones in TradingView, that's it. But they don't do any analysis, top-down analysis like our NeoStock software is doing. No other software is available in the market. The way how our NeoStock software is analyzing the stocks. So far, whatever you learned about our software is not even 10% of its original capabilities. Because why I did not explain the remaining things? Because they are beyond your experience level at this current stage. You are learning one by one. And few concepts in our software are even very, very, very advanced level. See, pierced zone itself, see all of a sudden how difference you will be finding after completing this entire video. Your perception will change. Okay, so that's why institutions notes how traders believe. They believe when there are pierced zones, next time when prices easily pass through the zone, we know that. So we don't look into that area. Anyway, it's waste of time. So they are aware of this point. That's why what institutions are doing? Institutions, by keeping the above point in their mind, they add new order flows inside the pierced zone. Next time when prices are moving up or moving up if it is a demand zone, or moving down if it is a supply zone. From where they are moving? From these traps area or lower time frame horizon area. They pick up the orders and they will be moving up. At the time they will add new order flows. And we are ignoring those order flows. We can find these new order flows at lower time frames. If you analyze, when you are doing top-down analysis, what you are doing, we are seeing a daily zone as a pierced zone. You ignore, is there any zone below our pierced zone? Yes, there is a new zone is there. I mean, new means a fresh zone is there, not pierced zone. And your concentration will be on that zone. You go to that zone and you fine-tune that zone and you analyze that zone. Simply, completely leaving the pierced zone. This is one side effect with top-down analysis. But anyway, I solved that problem by using this pierced zone concept. That's why every time our software displays the pierced zones. But normal supply-demand zone traders, they ignore that zone. They remove the zone from their charts because it is a violated zone for them. There is no separate pierced zone concept. Pierced zone itself, they consider it as a violated zone. But we changed that concept because that is the area institutions are playing. They are playing with the retail traders. That's why we want to understand them in a better way. The moment I introduce that pierced zone concept, problem is solved. Whenever there is a pierced zone, from now onwards, what we do? We look into the lower time frames and we will be finding whether there are any new order flows are there. Anyway, our software is doing that work. Even any lower time frame zones are there inside the pierced zone, it is analyzing. Because I integrated pierced zone in our software. Our software also can analyze up without pierced zones also, ignoring pierced zones. In the settings, a small change if I made, software ignores pierced zones. Because I added such kind of options in our software because sometimes we want to compare old systems with the new modern systems I developed. That means the modifications I did. But anyway, I found pierced zone is very effective. That's why I am displaying every time the pierced zones in our reports. So we can find these new order flows at lower time frames, but sometimes you will also see LOTL zone, a new LOTL zone inside the pierced zone. That means new zone will be displayed. When a new zone is there, people will be focusing on that new zone. They will draw the zone. But for us, it is inside the pierced zone. We know that institutions might have added a new order flow in the same area. Okay, mostly LOTL rarely you see, but mostly you see these lower time frame zones in the pierced area. And that area, definitely institutions keep strong order flows. Why? Because they don't want, generally, when the traps, whatever the order flows, most of the time it is consumed. After that, they will add new strong order flows within the pierced area. Their first goal is from the traps or maybe lower time frame horizon. They want to consume those order flows. After that, they will get into the pierced zone, add a strong order flows. You will understand when I show you more and more examples. But before I get into the example, one more important point, let me complete. Pierced zones also we will use as a target zone. This is one of the reasons why I am displaying pierced zones all these days. Several times I told you in HLQ zone analysis, even several times I considered pierced zones as my target zone. I am exiting the trade at the pierced zone. Several times I told you. I didn't tell you the reasons. I was telling you. Pierced zone also can be used as a target zone. Why? Because whatever the point, just now you land. New order flows in the pierced zones might be strong and they push the prices away from the zone. They will not let the prices violate the pierced zone, the new order flows. That is the reason why. If you don't book the profit, what will happen? Prices entered into the pierced zone. In the pierced zone, new order flows are there. Again, it pushed the prices. Now prices will be reaching your entry zone. That means whatever the profit you got so far, all profit is gone. If our bad luck, if our entry zone, next time if it is violated, we get loss also. Why? For not booking our profit at pierced zone. The reason why we are booking profits at the pierced zone is we are believing institutions might have added a new order flows in that zone. So that's why the calculations part, especially our software, when analyzing this bullish and bearish trade setups, the RR calculations our software will do up to the pierced zone. Suppose opposing zone is a pierced zone, till that only our software calculates. If RR is sufficient, then it will update the odd enhancer score accordingly till the pierced zone. If you don't use pierced zone, you get a very big RR. Many people teach like that. Till the new zone, fresh zone, there they book the profit. But all of a sudden, off of the target, it will reach and then again it will reverse prices. Why? Because that area there could be a pierced zone. That is having lower time frame orders, strong order flows institutions might have added. Even though they are lower time frame orders, still they push the prices up to our next, our entry zone. This kind of problems will be there. This is the reason why pierced zone can be used as a target zone to book the profits. Especially the previous lesson, whatever you learned, they are all very, very important. New order flows with pierced zone. Let me show you an example with this. Because we have seen an example for trap. We have seen an example for LTF zone. But this is very important. How pierced zone is creating a new order flow and how they are working. State Bank of India. This is also a daily zone. Forget the supply zone. This was the HLQ zone I drawn earlier in my analysis. Focus on this zone. So let me delete and let me show you with a fresh zone. Okay, see here, we have a rally, 2 base candles and a rally. This is a pierced zone, right? Here the zone is completely pierced. Do you have any demand zone in this area? No demand zone at all here, right? You have a wicks are there. A drop and went up. See, it is a pierce. See, as I told you earlier, when a zone is pierced, next time there is no rule that price should be closed inside the zone. It can again completely move out of the zone towards the upside if it is a demand zone. Closing the price inside is just a reference. Sharply moved and it went out and finally closed outside the zone. Price can be closed inside the zone or outside the zone. If it is a demand zone, above it should close. Not below. Below, if it is closed, it is a violated zone. So that's why you have to understand. It is pierced. Sharply prices move out of the zone. So that's why in the beginning I told you this point. Okay, anyway, this is a pierced zone. Now, how do we know institutions added a new order flow? Go to the lower time frame in this area. Many people ignore because it is a pierced, okay, leave this area. But now we should not do that from now onwards. Look into, take this pierced zone, see whether institutions created any strong order flow. See, when prices are moving up from here, what institutions have done? They have created a rally-based rally here. This is the 75 minutes demand zone. And this 75 minutes area again, but this is overlapped at the proximal line. That's why part is outside, part is inside. But okay. But while fine tuning, you will identify the exact order flow. Now go to the 15 minutes time frame. Is there any 15-minute zone here? You need to identify that. Okay. Here we have a drop, base and a rally candle. It's a failed ERC candle, but it is having a sufficient body and came out of the zone. Where is the zone? This is the zone now. The 15-minute zone. Because this is a drop candle till the leg-in low also we have to consider. So this is the 15 minutes demand zone. Drop base. It looks like you may be thinking it is a base candle because actually it is a big candle. Because of all these large candles, all of a sudden even large candles also become small candle. This is a highly explosive candle. This is the problem with the charts. So that's why always look into these ranges and compare with the other candles, small candles or medium sized candles. Okay, drop base rally. Okay. Still some of you may think maybe this is really, or maybe we compromised and drawn this zone. Even compromised also okay, because our real order flow is at the 5 minutes level. That should be proper. If that is good, no issues at all. The fine tuning is acceptable even if it is compromised. The 15-minute zone. Okay, now go to the 5 minutes time frame. Check if there are any 5-minute zones are here. Demand zone. But this is leg out looks very small, that is what you may say. So if you have any doubts, go to the 3 minutes time frame or 1 minute time frame, we get better clarity. Because we know 3 minute zone could be a supplement to the 5 minutes time frame when 5 minute zones are not very clear. At the time we can consider. This is not really clear, but have you noticed? Rally base rally. Lower time frame zone as an horizon to the higher time frame zone. This is making, it's a very powerful concept. Rally base rally. So that is the area, the order flow already institutions added. Why that is very strong order flow? Because this is the origin, this 3 minute zone. Now we are seeing in the 5 minutes time frame. 5 minutes time frame, this is rally, base, rally. Now zone comes like this. The 5 minute zone. Rally, base, rally. See now almost this entire area. This is a rally, this is a 5 minutes candle now. Rally, base, rally. This is the area you have institutional real order flow. Actually they kept it here. Remaining everything is just it is getting tested and consuming the orders, or maybe adding new orders in this area. Lower time frame zone as an horizon to this entire 75 minutes fine-tuned zone. This entire thing is 75 minutes zone. For this entire 75, this is the actual institutional order flow. Now let me delete the remaining things. To bring clarity, you get clarity. See, this is the 5 minute zone, rally, base, rally. And this is the horizon for this entire 75 minutes fine-tuned zone. And it picked up the orders from this 5 minutes area and then started moving up and moving up and further moving up and gave a huge move from this zone. Prices moved very far away. And here a new high liquidity supply zone is created, and that again pushed the prices up to this pierced zone. This is a pierced zone. Inside pierced zone, we have a new order flow. Exactly that area prices entered here. The 5 minutes area again moved up. After that again it entered. Again moved up. And this time prices entered inside deep, not very deep, but till the middle. And again see this time how powerful it pushed. Earlier also while pushing, up and downs are there. But here you see, the moment prices entered inside the zone, how strongly it pushed. Such a strong order flow in this area. Where all these orders are there? All these orders are there inside the pierced zone. Let me delete this 75 minute zone also. Now exactly we focus on that 5 minute zone, where we have institutional order flow. Now you tell me, where they kept this new order flow? Inside the pierced zone they kept. This is the zone. How we identified this zone? Using the lesson 22 concept, we identified this zone. This is the origin for the 75. But actually, this is the real institutional order flow. This rally, base, rally. From here they picked up and pushed it. Again tested and pushed further up. They might be keep on adding new order flows into this zone. That's why it is working multiple times. Already 2 times it worked from that zone. See, this is the 3rd time. This is the 4th time. And the recent one is the 5th time. When November 21st it gave. How much here? Around 765 rupees. 765 rupees could be your entry. Until this supply zone, high liquidity supply zone, what is the value here? 875. See, huge profit. And when you got the entry 21st November, and when it could have been reached your booked your profit on 6th December. In 15 days. That is the power of these pierced zones. But generally what we do, we completely ignore this zone. Because it is a pierced zone. It is not a tradable zone. I also told you, it is not a tradable zone initially. Why? Because I don't want you people to learn the concepts, leaving the earlier concepts and focusing with half knowledge. If you are learning lesson 28 means, you might have already completed all the earlier lessons, you might have practiced good enough. By this time you will become a very sincere and disciplined trader. Only sincere and disciplined traders only will complete all these lessons. Otherwise, after completing 2 or 3 lessons, we might have run away from the system. All the members who are listening this video, it is a clear indication you are a sincere trader. Maybe you might be a first-time learner. First time you are learning all this course. Maybe you are an experienced trader and learning these concepts first time. Already you are a supply-demand zone trader and you've been already learned these concepts earlier somewhere outside by paying some money. And after that you found this channel and again attending all the lessons. Because you found many new concepts here, definitely you have to learn from the first lesson. Because every lesson you learn some new points which you have not learned earlier. And some of you are experienced, very highly experienced traders attending these sessions. Some are supply-demand zone trainers, you are attending these lessons. Because I invited all the members. I invited supply-demand zone existing trainers to attend. Because I am not a supply-demand zone trainer. I am a software developer. My focus is on the NeoStock software, promoting that software. But why I am providing this free training is, for me this is a one-time effort. I record and after that I forget. So that all you people get an opportunity. Because it is a highly expensive training program. Many people are not in a position to pay huge money for learning this course. And moreover, existing in the market, whatever the concepts are there, they are not good enough to cover all these concepts in depth level. Very few, I am not sure, very few people might have done experiments and trying to identify new concepts in this area. The main advantage I am having is the software, and the software while developing did a lot of experiments. So much study I did. Every time I was trying to think like an institution. Every time I was trying to think like how I can trap a retail trader if I am an institution. With that mindset, I basically get into the shoes of the institutions. Thinking like institution. Thinking like how to trap the retail traders. With those ideas, how can't I'm not getting the exact words. How can I trap like this, or how can I trap like that? That way I'm visualizing scenarios. The moment I get a scenario in my mind, immediately I write the program and I see how the results are working. These kind of experiments I did, a lot of huge research I did. You people can't even think how much time I spent in this area. That's why today, luckily, we got the complete solution with all the new concepts, especially profit-making concepts we are developing. See how well they are working. State Bank of India has given a huge profit. And from where it gave? It gave from the pierced zone it gave. Because of this point, new order flows within the pierced zone. Now you read the points, you get the complete clarity. Institutions know supply-demand zone traders analyze the stocks based on top-down analysis. Traders believe when there is a pierced zone, next time prices easily pass through the zone and they ignore that area. Our focus will be the zone that is not pierced, the one below the existing demand zone. You might be seeing a fresh zone, focusing on that. So institution knows that. By keeping this point in their mind, what they are doing, they are planning their new order flows within the pierced zone. Hope you got the clarity now. Okay. So that is the reason why I am suggesting new order flows in the pierced zone might push the prices away from the zone, so that pierced zones can be used as a target zones. Maybe you are taking your trade in a fresh zone, a fresh fine-tuned zone, but before reaching your fresh supply zone, in between there is a pierced zone is there. I am suggesting you keep your target until that pierced zone and do all your calculations until that zone. The moment you add the pierced zone, your RR, everything will change. Okay. NeoStock scan reports. See how I scan? Simple. You know, you already, I've been showing, if you look into the old NeoStock reports, because I am publishing some 10 days old reports to all the members. But premium members get the immediate access. So after 10 days, you will be getting old reports. Still, old reports are good to find some good trades in swing related trades. Some trades always people get from the old reports. Okay, in our while scanning, you have a pierced count. Are you seeing this pierced count? I am moving my mouse here. So here, at the daily time frame, all these days we are setting minimum value 0, maximum value 0. But today, here what is that I set? In this example, I am showing you minimum value 3. That means minimum 3 test should be there on that zone. Which test? Pierced count should be 3 times. That means 3 times price should go below the pierced zone, go out of the zone, and again price should come back. All the 3 times price should come back to the zone. That is an indication that strong institutional order flow is there below that way. Of course, I tested even 2 by keeping 2, by keeping 1 also I selected the stocks. But in this example I am showing you 3 and maximum 10. You can, if you feel 20 times a zone can pierce, keep 20 also. Generally it won't happen. It is limitless. Anything you can keep. But the result doesn't change whether you keep 10 or 20. Because maximum I got it from the list is only 6. Okay, with this I set these values and I search it. That's it. Only thing is zone I selected as a demand zone. Daily demand zone. Because these values should be applied to daily demand zone. Supply zone can be anything, no issues. But daily zone, I am setting these conditions. See, we got this result. I got 13 stocks. See here. You can look into the search criteria what we said. Entry zone is demand zone. And entry time frame is a daily. The search strategy is saying zone pierced count and daily time frame should be between 3 and 10. Greater than or equals to 2 and less than or equals to 10. That means minimum 3 times tested, zone is pierced, such kind of stocks will be displayed. Demand zones. Demand zones. See here you have PAE, pierced column is there. See 3 times. 3 times pierced, 4 times this zone, 6 times, 5 times, 3 times, 3 times, 4 times, 3, 3, 4, 3, 6 times. All these stocks. So majority of the stocks I selected from this list. So let us look into the more examples from this list what we got. So many stocks I added. See IEX. IEX is there in this. METROPOLIS is there. Where is METROPOLIS? I think METROPOLIS is there in 2 times pierced list. That is 2 times pierced. State Bank of India is also 2 times pierced, but I think it is not there. Next GNFC. That is also might be 2 times pierced. ZYDUSLIFE, here we have ZYDUSLIFE from this 3 times. This is 3 times pierced. Actually 1 time pierced 50 stocks it has shown. At least 1 time it is pierced. Out of 240 stocks, 50 stocks are pierced zones only. SYNGENE, see here. NTPC, this is NTPC. SONACOMS. This one, SONACOMS is here. Majority of the stocks are from this 3 times pierced. Just now what we discussed is State Bank of India. It is pierced only 2 times. That's why it is not displayed. How can we say it is 2 times it is pierced? Because 2 times only, 2 candles only came 2 times. See here. This is the first time and this is the second time. Both these candles came out of the zone. So that's why the list is did not display SBI. If you would have kept 2 times, you might have seen this stock also. Because all these stocks I have taken from scanner only. Our software generated reports. Otherwise, finding all these stocks from 200 stocks is impossible task. I just finished in few seconds, that's it. And remaining thing is we have to analyze the stocks. Now see, look into the next stock, GNFC. This is a daily, all are daily zones only in this. I have taken, and moreover all are demand zones because the list itself is a very big list. See, we have a drop base rally with the hidden body, pro gap. And this is the zone pierced here. It is only pierced only once. That's why GNFC is not there in the list. It is pierced only once. Okay. This one we need to, from where it is pierced, as per the rule, here I am drawing a horizontal line here. This is the technique. If you follow, it will be easy for you. And we need to find whether any trap or any lower time frame horizon is available. Either one will be available. It could be a trap or it could be a lower time frame horizon. One of them definitely you will get. Go to the 75 minutes time frame. Any 75 minute zone is here? Yes. We have a drop, 2 base candles and a rally candle. This is the 75 minutes demand zone. Drop, 2 base candles and a rally candle. And this 75 minutes demand zone is overlapped with this daily. But this is a very big zone. Yes, it is a big. But while fine tuning, if you find the risk within your accepted limit, you will accept. Otherwise, you will leave this trade. Next, if fine tune with 15 minutes time frame. Go to the 15 minutes time frame. Are there any 15 minutes order flows available? Yes, here you see drop base rally is created. This also created before this zone itself. But within this entire 75 minutes area, this is a fine tuned zone. And this is also overlapped with this entire daily zone. Daily zone is actually picked up the orders from this drop base rally, the 15 minute zone. And within this 15 minute zone, we need to fine tune with 5 minutes time frame. And that is the place we will be planning our trade. You have a rally, 2 base candles and a rally. Or maybe this is the one. Rally at the hidden body. Then this is another rally candle. If you add the hidden body, another rally, then this is the only base candle and rally. This is the one. It looks like a base candle, but actually, see the hidden body. The moment you add the hidden body, it is a big candle. So this is the one demand zone, and also you have drop base rally is also there. This is also you need to consider. You have 2 order flows. What kind of order flow? LOTL order flows. Either you have to plan your trade, keep your entry here, and your stop loss will be here. That is the way. If you feel risk is very high, LOTL, what we do? The upper ones we remove. We keep the origin. This is the origin. Drop base rally is the origin. Because here you will be adding a hidden body here. See here. The moment you add the hidden body, this entire wick, whatever you are seeing, that will be a body. The whole thing will be a rally candle. Don't ignore that hidden body in this candle. That's why I'm saying drop. See, this is the medium size candle. The moment you add this hidden body, this entire thing is a large candle. And from here, from this zone, it picked up the orders and then moved. That's why this is the origin. So this is the actual order flow. See, exactly prices also entered into this. We already drawn this blue color line. From this zone only, it picked up the orders. See here? From this zone only. Here we have drawn the blue color line. Okay, from here again sharply moved and again base candles and again rally candles, some movement. That means LOTL zone is created. Definitely it may give you another trade opportunity here in this zone. Because this is the origin. Here we need to plan our trades. So GNFC, this is. And next one is, see if you look into the daily candle point of view, see from here it picked up and moved up. So this is the power of the lower time frame zone as an origin. See, lower time frame zone as an origin, you need not wait for the zone piercing. While analyzing the stock, if there are any origins, you can draw on your chart. First time itself, you get the opportunity from that area. Okay, next one is ZYDUS. This is a daily high liquidity zone, pierced zone. Forget the supply zone. Recently, we drawn this for our high liquidity zones point of view. Our focus is on these supply zones. Demand zones, not the supply zones. So see, this demand zone is already pierced. Multiple times it is pierced. Okay, first when it is pierced in this candle, immediately you have to draw horizontal line. In this area, where order flows are there, you need to identify. It could be either a trap or it could be a lower time frame horizon. That you can find in the lower time frame. So go to the 75 minutes time frame. Check in this blue color line area, any zone is available. Yes, we have a zone. We have a drop, 2 base candles and a rally follow through candles. Of course, you can also keep this candle medium as part of the zone, and this is the actual leg out. But because this is the origin, we can drop to here. That is good enough. Because this is the origin, here you mostly find lower time frame, further fine-tuned zone within this area, not here. So this is the 75 minutes zone. This 75 minutes demand zone is a origin or is it a trap? This is the trap. Why not origin? Because it is not overlapped with this distal line. So because this is the 75 minute zone, if you fine tune, you may get strong institutional order flow. So go to the 15 minutes time frame inside this 75 minute zone. You have a very big order flows are here. We have a drop, you have a base, 1, 2, 3, 4, 5 candles. You got a big 15 minute zone inside a big 75 minute zone. So this is the 15 minutes demand zone. Drop base, all these base candles and rally. See, both are medium sized candles, but this is considered as a leg-in because it is having, most of the candle is having the body. But here only body is less than 50%. Anyway, all these are all small candles. These are the medium sized candles. Okay. So this is the 15-minute zone. This 15-minute zone we need to fine tune with, sorry, I made a mistake. This is the 5-minute zone, not 15 minutes. So I have to go and draw the 15-minute zone. Drop 1, 2, 3, 4, 5, 6. And if you consider this as a rally, probably you draw the zone like this. Either way is okay. This is the 15 minutes demand zone, and inside the 5 minutes demand zone, what we already drawn earlier, now again we have to draw, because I made the previous one as a 15-minute zone. Okay. So here you have a 15-minute zone. Let us limit this as a leg in, because 15 minutes risk is very big. This much risk accepting is very, very difficult. So that's why I'm limiting. If it is 15 minutes, okay. At 5 minutes, we should be very, because this is the area, a lot of narrow range is there. That way I'm considering. See how our perception is changing when we are at different time frames. 15 minutes level, our mindset is thinking in a different way. 5 minutes level, our mindset is thinking in a way. It is okay to keep inside the zone if it is 15 minutes. But 5 minutes, it is not okay. Because I am very strict about my risk. Risk is very, very important. We can't plan the trades if the risk is very high. That's why we are like what is the right word? Okay, anyway. So this is the area we got the trade. Has it given any other trades from this zone? Yes. Second trade, third trade from the same zone. My God. 3 trades it has given. How powerful they are working. And after third time, see what institutions have done. Now go to the 75 minutes time frame. First let me go to the daily time frame. Let me scan this zone. Whether institutions have done anything. Have you noticed? Drop, base, rally, institutions created. This is LOTL zone. Within the pierced zone, LOTL zone is created. Let me directly go to 5 minutes and see what is happening. I don't want to draw fine-tuned zones quickly because institutions are keeping a very strong order flows. What I do, let me draw all the order flows as it is. Let me see what is happening. Okay, drop, base, rally. Here also drop, base, rally. Here rally, base, rally. Here drop, base, rally, LOTL. Okay, how these order flows? See, they may be fine-tuned or they may not be fine-tuned. Just I am trying to see how institutions are using this pierced zone. See how many order flows they created, 5 minutes level. Maybe some of these 5-minute zones could be fine-tuned zones, some may not be fine-tuned zones. But how importance institutions are giving, how these zones are working, I want to understand. And I want all of you understand. See here, the first 5-minute zone, maybe it is fine-tuned or may not be. Directly drawn from 5 minutes. See how it is working. First time prices came close to the zone, moved up. Second time, moved up. Third time, entered into the zone. Now fourth time this is violated, and see, picked up the orders from the one below this zone. See, the one they deleted, violated here, maybe institutions created a new order flow here. See, once it is violated, they created a new order flow exactly in this area. I am deleting this. Now let me draw a fresh zone exactly from same area. Now let me draw the zone here. Rally, 3 base candles and a rally. See, from here it picked up the orders and moved up. Again picked up the orders and moved up. Again picked up the orders and moved up. Now it is violated, and the second one already tested earlier. Again it picked up the orders and moved up some extent. Maybe intraday profit it has given you. Now it is violated. Now next time it came somewhat close to the zone but not very near to take the trade. Maybe within these order flows, maybe institutions may create a new order flow again. Any other chances are there? No. Because these are drop, rally. So there is no order flow here also. Maybe drop, 2 base candles and a rally. But these are the big candles. But may consider as if like this. We got a very big zone. Risk management is not easy if it is intraday trades point of view. But here my interest is not about the trades. My interest is all of you, I want you make all of you understand how powerful institutions are creating the zones inside the pierced zone. How powerful these zones, newly created zones inside the pierced zone. See how they worked. First, what institutions did, they ensured picking the orders from this area. Which area? The bear trap area. This is the bear trap. From this bear trap area, they executed, and finally institutions decided after multiple tests, they changed their concentration within this area, and these order flows are working very well. The one we deleted earlier we have drawn here. Another one we have drawn here. They gave good number of tests. After that they violated. Again exactly the same area they created again a new order flow after zone violation. Next time onwards again the same area is getting picked up. All these days ZYDUSLIFE we were looking into the supply zone trades in the HLQ zone analysis because you haven't learned about pierced zones. But otherwise you would have captured profits from both the ends. See, this is pushing the prices. Do you remember? Previously we discussed, this is the point. Pierced zones as a target zone. See, this is our HLQ zone, high liquidity supply zone, but target is pierced zone. From pierced zone prices are coming. We got several profits earlier from this zone. Somewhere here we have drawn a high liquidity 5-minute zone. Recently only it is violated, this one. Until then, let me draw horizontal from where we got the profits. Roughly somewhere here. This is the area, we have a zone, 5 minutes high liquidity zone that has given multiple tests. Each time it is pushing up to the pierced zone. Took a trade, again pushed up to the pierced zone. The pierced zone is not letting the prices go down. People think it is a pierced zone, don't focus on this. But institutions, happily they are making sure all their orders are getting executed. Their long orders. They fooled all our retail traders by keeping the order flow inside the pierced zones, new order flows. So that's why pierced zone is a very important concept. We have developed strategies That's why the name of the lesson itself, pierced zone strategies. Still, if you want more examples, I can. Already by this time, the length of the video might have been increased, but still, some of you might want to learn more and more. So 3 more stocks are there. Let me quickly finish. The next one is SYNGENE. This is also a daily pierced zone. See, this zone is pierced. Somewhere in the first time it is pierced from here. So within this area, lower time frame, any zone, we need to identify. So I'm going to the 75 minutes time frame. 75 minutes, here you have a drop base rally is there. Actually, the origin is coming from here. Here we have a zone is there. This is the one. We have a drop candle, 1, 2, 3, 4 base candles, rally candle. This is the actual origin. This is the 75 minutes demand zone. And from this origin, LOTL zone is created, drop base rally. This is the one. And look both the things in a different perspective. Let me delete. First, it looks like a trap. Why? Because this is not overlapped with the distal line. But the moment this LOTL zone you draw, this is looking like, this is the 75 minutes LOTL zones. The origin means not the lesson 22 origin. Here origin means the initial place where the zone is started actually. Where the order flow is started, initial order flow. That way also you can say origin. The origin from where the actual order flow is started is the origin. Okay, that origin is having LOTL zone, drop base rally. That LOTL drop base rally is overlapped with the daily zone. So that means this LOTL zone is overlapped. But whatever it is, both these zones, the common area is this blue color line. That is the area order flow is created. Okay, first let me finish my analysis in this area. After that, I will get into the LOTL area. Okay, the 15 minutes fine tuning I have to do. Here I have failed ERC candle as a leg-in. Maybe this is a rally candle, base candle, rally candle. From the main source, this is the order flow. Institutional order flow. So this is the 15 minutes demand zone. Leg-in, base, rally. In this blue color line, the order flows are not really great, so I am leaving that. But this is the area we get future trade opportunity in this area. Okay, now let me identify the 5 minutes order flow in that area. So is there any? Yes, we have this is a failed ERC candle. That way you can consider it is having 50% sufficient body is there. But let me consider this as a rally. If you draw a drop base rally, you have to draw a very big zone like this. Handling that much risk is very, very difficult in 5 minutes time frame. That's why this is the demand zone, fine-tuned zone. Those who can handle the risk, you can draw a zone like this. If the risk management is difficult, let us limit to this. Of course, sometimes you might be having disadvantage also. It might be stopped out. Any risk will be there. But okay, this itself is the institutional activity took place here. The imbalance here, the imbalance. So with that confidence, I have drawn this. And 5 minute zones are not any clear structures are here. But in the 75 minutes LOTL zone order flow, we need to fine tune. This is the area we need to fine tune. So let me go to the first 75 minutes time frame to show you the zone we have drawn already, the LOTL zone, drop, base, rally. This one again I am fine tuning with 5 minutes time frame. This 75 minutes LOTL is the horizon to the daily zone. This is the horizon to the daily zone. This 75 minutes zone. So here, is there any 15 minutes order flow? Yes, we have a drop, base, rally. And you see, this is picked up from, orders are picked up from this fine-tuned 5 minute zone. The main horizon, fine-tuned 5 minutes. From there it picked up the order, and this 75 minutes LOTL zone is created. Even 15 minutes also the same case. Drop, base, rally. This 15 minutes candle picked up the orders from this fine-tuned 5 minutes from the original horizon. This is the LOTL zone. Now go to the 5 minutes time frame. Is there any fresh 5 minute zone is there? We will see. Fresh means the one created. Have you noticed? The structure, 5 minute structure is not good. Looks like failed ERC. Can we consider this as a base candle? No, it is looking like a medium size like candle. But is there leg out picked up the orders from this area? That means, is there any miss zone? Are we missing? That's why previously we learned when some clarity is missing in 5 minutes, go to the 3 minutes, you may get some clarity. So I'm going to the 3 minutes time frame, because 5 minute structure is not really clear within this 15 minutes area. This is the 15 minutes area. Now in the 5 minutes area, see here, we have a very clear structure. We have a rally, base, rally. Demand zone. Exactly from this demand zone, prices, the blue color line what we have drawn, see, that is within. That means prices entered into this zone, and this is the reason behind pushing the prices and making the daily zone as a pierced zone. So that's why this is an important zone. Generally we may leave. 5 minute structure is not good. How it took the orders from this? Maybe generally even I might not have ignored this. Even I might have ignored this. Because this is the area, the blue color line is passing from this area, and that pushed the prices. Then immediately I sensed there could be some 3 minute zone. Maybe 5 minutes clarity is missing. 3 minutes some zone might be there. The moment I went to the 3 minutes, excellent rally, base, rally. This is the failed ERC as a leg out candle. The dynamic view, it is a rally candle. Now you see how excellently this 3 minute zone is the horizon. From here it picked up the orders. Initially the zone created, daily zone. This is the daily zone. This is the distal line. The daily zone distal line is a 3 minutes level. And from there, the whole move started. This is how daily zone is created. That means real institutional order flow is there in the 3 minutes area. This 3 minutes area is the lower time frame zone as an horizon to this entire daily high liquidity zone. When daily zone is pierced, see here, it picked up the orders from the 3 minutes horizon and moved up. And once again prices came to the 3 minutes horizon, moved up. Once again prices came near to the 3 minutes horizon, again moved up, and then a big rally started. And now prices finally, this is the time this 3 minutes zone is violated. Now let me delete because it is violated. And the main 5 minute zone, where the LOTL 75-minute zone is started till their prices came somewhat close to the zone. Maybe entry buffer, it might have given you a trade. And this is what happened in SYNGENE. Now you know what institutions did? In the 75 minutes, they created a new demand zone. A new 75 minutes demand zone is created here. Where? Here. This is the failed ERC candle as a leg-in. 1, 2, 3, 4 base candles and a rally candle. This is a 75-minute zone. Our software identified this 75-minute zone as a high liquidity zone. This 75 minutes high liquidity zone. Previously we discussed this zone. We fine-tuned this zone. Previously we discussed and fine-tuned. I explained in one of the HLQ analysis videos. And where is this 75 minutes high liquidity zone? It is inside the daily pierced zone. See, this is the daily pierced zone. Inside the daily pierced zone, this 75 minute structure is there. Okay, because all these things are mixed, a lot of confusion for time being. Let me delete this. Now you see, you get clarity. This entire daily zone is a pierced zone. Even let me delete all these things what we analyzed. Let me keep the original from where 75 orders are picked up. See what people think? This is a pierced zone. Let us ignore this zone. And moreover, it is pierced multiple times. First time it is pierced, second time it is pierced, third time also pierced. Our focus will be maybe in the traps. Definitely some people will focus on this. But our interest is not inside. But institutions created a high liquidity zone inside 75 minutes time frame. This is the leg-in, 4 base candles and a rally candle. This is the 75 minutes high liquidity zone identified by our software. Because the stock is listed stocks near the 75 minutes demand zone. So what is the reason behind this concept? This is the concept. New order flows within the pierced zone. Because the traders believe when there is a pierced zone, next time prices easily pass through the zone. By seeing all these things, people are thinking it is easily passing. Yes, what we are thinking is correct. But now institutions created a zone and picked up the orders, and from here orders are executed, and then it further moved up. Next one is NTPC. This is also a daily pierced zone. All these are all we listed from our software. Where it is pierced first time, here. This blue color area. So what we do, go to the lower time frame, check anything is there. If not, again further go down if no zone is there. Is there any zone available? Yes. Rally, base, rally is there. This is the 75 minute zone. Draw the zone. This is the 75 minutes demand zone. And within 75, we need to fine tune with 15 minutes demand zone. We have a drop, base, rally, the 15 minute zone. Within the 15, again fine tune with 5 minutes time frame. Five-minute structure is not good. Complete failed ERC, but have you noticed? rally base rally. This lower time frame zone as an horizon to this entire 75 minutes bull trap area, sorry, bear trap area. This is the bear trap. But the main horizon is this is the one. But first time prices did not reach up to this zone. A little before here from this blue color line. Maybe go to 3 minutes. Let us see anything we will get. Data is not available. When it is 13th May. Okay, 3 minutes data is not there. So we need to live with this. The 5 minutes data only. So this 5 minute zone is a rally base rally we should consider. That's it, no other option. Next time when prices enter into this area, rally base rally, definitely we can plan our trades. First time when it is violated, where prices came till the blue color line area. A little short of our this 5 minute zone. 5 minute zone as an horizon to this entire 75 minutes bear trap. Next time any prices came into this zone. No. That's it. So this is the area only once it came, but go to the 75 minutes time frame inside the pierced zone. Inside the pierced zone, see when it picked up the orders and moved up and came down, now drop base rally is created. See from this 75 minutes area, they picked up and again LOTL zone. This is the horizon is the bull trap, sorry, bear trap. And this is the new order flow inside the zone. Okay. And this is 75 minute zone inside the daily demand zone. Okay, within this 75, is there any 15 minutes order flow? Let us verify. Yes, there is a 15 minutes order flow. We have a rally, 3 base candles and a rally with hidden body and pro gap. This is the 15 minutes fine-tuned zone. We have a daily pierced zone. Inside daily pierced zone, we have a 75 minutes new zone is created. That 75 minutes new zone is having 15 minutes fine-tuned demand zone. Inside this 15 minutes fine-tuned demand zone, let us look for the 5 minute zone. Okay, here we need to draw the zone. Yes, we have a drop base rally. See, this is the drop. We have a base and with the pro gap and hidden body, a big rally candle. So this is the actual institutional real order flow, the 5 minute zone. Did prices enter into this area? Let us verify. Exactly from there. How sharply prices moved up. You see here? Drop base rally and sharply prices moved up. Again here a new drop base rally is created. Next time from there it picked up the order. If the risk is within accepted, you can combine both the zones. If the risk is big, you have to plan your trade in the lower one by keeping an entry buffer. If you slightly miss the trade, okay, you have to accept missing the trade. If risk is accepted within this drop base rally, your order would have been executed here in this candle. After that, see, a very big move it has given. And it was a flying prices up to here. And further, a big move it gave. So let me go to the daily, you get better clarity. Okay, now you get the clarity. See, it picked up the orders from this and then sharply how it moved up. Huge profit, those who have taken trade here and holding the stock. Completely, it's an all-time high. After that, it reached the all-time high. That means the pierced zone trade gave you all-time high. Can you believe? A pierced zone, which we feel don't require to take any trades from this zone, but today it gave a huge profit. Because all these days you are not aware of these concepts. Which concepts? New order flows within pierced zone. Why new order flows? How institutions are thinking about retail traders. How retail traders are thinking about the pierced zones. All these are all the reasons behind why institutions are reusing pierced zones. Maybe this is the right word. Institutions are reusing the pierced zones. Maybe that could be the right heading for this concept. New order flows within pierced zone is nothing but reusing the pierced zones. And see the last one, any stocks we discussed. Sona Forgings is a daily high liquidity zone and it is pierced. Pierced zone can be used as a target, right? See here, actually we got this trade the last Friday. See, it picked up the orders from this pierced zone. The 5 minutes here, this high liquidity zone is having a 5 minutes order flow horizon. From there it picked up the order. See how sharply, and it went up to almost up to the this pierced zone. Pierced zone is can be used as a target. Maybe it is a holding. See all these candles, it is a holding. Probably here at lower time frame, institutions might have created some order flows here. So this is the order flow, rally, base, rally. This is the order flow. Institutions are created at the pierced zone. So this is the 75 minutes demand zone. Within the 75, we might be having 15 minutes demand zone. We have a drop, 1, 2, 3, 4, 5, 6, we can combine all. This is the 15 minutes demand zone. Within this 15 minutes, any order flow, 5 minutes order flow, we need to identify. Yes. We have a rally, 3 base candles and a rally. This is the 15 minute zone. And this 15 minute zone is holding the prices and acting as a high liquidity zone. See, first time when it reached, the prices went deep inside. But again, this is a rally candle, failed ERC rally, base candle and a rally candle. That means LOTL zone is created. Mostly high liquidity zone, we see such kind of price actions. Sometime it moved within this area for some time and then again pushed. See, this is the PR. This is about how institutions are reusing the pierced zones for creating the new institutional order flows. How many trades it would have given? So many trade opportunities from this area. Again, drop base rally is created. If you fine tune, you will get these trades. This trade you will get. See, after that it reached up to here. So this is the power of the pierced zones. Hope you all will understand the importance of the pierced zones. It's a long session, I know, because I took several examples. Because you need to understand, because you need these many examples to change your perception. Otherwise, you will be thinking, oh, pierced zones, how can we use? That's why I gave you as many as possible examples, many examples. Let me give you one more, angel one. Pierced zone when it is a 26, 11, 24. This is the one. When it is 26, 11, 24, four base candles. This is the one. See here. This is the daily zone. 26, 11. You have 1, 2, 3, 4 base candles and a rally candle. And this zone is pierced here. Go to the 75 minutes. It is pierced a little below. Here we have a rally base, rally is there. Go to the 15 minutes. See, all these are all base candles. So 15 minute structure is not at all good. So that means this area is not good at all. But go to 5 minutes, you will see the interesting thing. 5 minutes institutions created a new rally base rally. This rally base rally is not a fine-tuned zone of 75 minute zone, because 75 minute zone doesn't have proper 15 minute zone. This is a new order flow. And here institutions added a huge order flow. And when the zone is pierced, see here, just small gap. That means almost, maybe, small entry buffer. If you add, it could have been a very good profit. Next time, prices entered into the zone and further moved up. Next time again came very close, a small entry buffer. Again, see, further moved up. And what is this concept? This is the bear trap. Why not LTF zone? Because it is not overlapped with the digital line. So it is not a LTF zone. It is a bear trap just below the daily zone. A 5 minute zone. Directly it is a 5 minutes. It is not a fine-tuned 5 minute zone. How a fine-tuned 5 minute zone is working so strong. That is how institutions keeps the order flows. This is also a pierced zone. This is also identified from our software only. If you look into the software, except maybe 2 or 3, remaining all are valid zones. Those 2, 3 are, I think they were because of the price action on elections results declaration day. So I ignored them because they have very long wicks away from the zone. Again, sharp reaction. We have to ignore them. We can't plan such kind of. Some unexpected high volatility happened from the zones. Better to ignore them rather than planning. See, generally what should happen? A small distance, from there again prices should go up. Then only you need to consider, but not a very big distance. So somewhere here up to here, if prices fall down and again moved sharply, you cannot consider the traps. Traps should be somewhat close to the zone, below the zone, somewhat close, not very far away. Prices are going far away, we can't consider them as traps. Better to ignore those stocks. Hope you all understood the power of pierced zones. And from now onwards, you all should change your perception about understanding the pierced zones. try to give importance to them, try to analyze them, look for the opportunities. But you need to remember, you need to get some experience. Without experience, playing too much on the PR search zones is dangerous. Let me repeat that word. Carefully you need to analyze. It's not easy to play with institutions. That's why first I'm making all you people get into the safer trades all these days. Even if you miss few trades, no, not a problem. But the trades you take should be safe, as much as safe as possible. Because I realized earlier also, many people made mistakes in understanding what is bull traps and bear traps and understanding them. Now hope you might have got better understanding of analyzing these traps with the help of PR search zones. So this is about lesson 28. Hope this information will be useful to you. All the strategies might be helpful to you to plan in much better way in the coming months or coming weeks. And the next session is yet to be decided, but definitely it will take few weeks time to plan our next session. Until then, you have to practice a lot by using these PR search zones. So thank you all for attending this session. Let's all meet again in our next training session. Thank you.